Hi, this is Zach here from Zach's Traders Cafe with a look at some major markets on Monday, the 23rd of May. Starting off with the FTSE 100, and while Brexit could be something that causes global warming and the end of the known world, so far it hasn't actually affected the UK's leading index. We seem to be consolidating just above the 6,000 level and also at the floor of a rising trend channel from January. At this stage, it's the same game as we've had for for much of the month so far. End of day close above the 50-day moving average at 61.99 or back below 60.50 would dictate the direction here, the near-term direction. Upside of this stage seen as being as high as 65.50, which is the top of the channel, or perhaps as low as 58.45, which is that last February low. The three bounces off this falling trend line in the RSI window are suggesting that we are heading higher, although even so, one would want to wait and see an end of day close for the RSI above the neutral 50 level, really, to be confident that the right sort of momentum, or the right degree of momentum, was behind this market. On to the DAX, and here we can see that similar sort of picture to the FTSE 100 in the sense of this bumping along the bottom of a trend channel from the beginning of the year. Last lows there, 97.37, 97.67 and 97.73, so looks as though this market is at the bottom of its range, at least while above 9700. We're looking for the 200-day moving average at 10.114, although at this stage it might be a bit premature to get more excited about the upside than that. On to the US markets, and here it's a bit of a dance along or around the 17,500 level, which was the neckline support here. RSI at 43, so that does sort of tip us to the downside, and really if you're cautious, you'd wait for an end of day close above the 50-day moving average at 17,692. Otherwise, obviously, you're buying on dips towards that last 17,399 March low, which is so far held despite a minor bear trap below it, 17,331 last week. Onto the S&P, and we're in the same sort of situation of being right on the line as far as support is concerned. In fact, it'll dip down there to 2025. That sort of just took out the 2033 April support and neckline there. Probably the best thing here, just to get rid of this sort of game playing that this market is coming up with at the moment, would be to wait for an end of day close back above the 50-day moving average at 2060 as a momentum trigger before targeting 2100 plus for this market. For the Nasdaq, we remain in the range 4300, 4420, 4426, the 50-day moving average, and 4300 basically the intraday low zone for the Nasdaq so far this month. Just a hint here now of RSI support uptrend line there, and that's been triple tested in recent weeks, so that does suggest that if there's anything, it is building up to a new leg to the upside, but obviously wait for that 50-day line to break. Onto the currencies, and for cable, obviously still buffeted by the Brexit end of the world scenarios. The major event here has been the rebound off the 50-day moving average at $1.4360, now holding above the 10-day average at 144.77, which is quite a positive sign actually, and suggests that we are capable of at least retesting the 147.70 May peak, which started the month, and that's up just below the 200-day moving average at 147.88. And that could be hit over the next 2 to 3 weeks. Stop loss end of day close back below the 50-day moving average at 143.60. Onto the euro, and here also rather choppy price action here, but at least we are sort of in a relatively straightforward technical position, in the sense that we're right at the floor of this rising trend channel from November, the floor of the channel towards 111.80. And that is currently the level to buy this market on dips. Stop loss and end of day close back below the 200-day moving average at 111.80. even, upside up to 116 as best case scenario. Be cautious though, you wait for a clearance of the 50-day moving average at 113.16 before going long. Dollar yen, probably the best and the most reliable of the markets in the recent past. We got our 110 plus target after this bull flag here around the 108 zone. What will be interesting now is whether we can hold above the 10-day moving average at 109.37. That's the boundary really between regarding this market as bullish and bearish. End of day close below that could then see or witness a retest of the worst levels below 106 for May after that. Trend changing probably back above 112, which was late April resistance for that market. Finishing off with gold, and here we can see that basically holding the neckline, that's around the 1245 level, 1240 level rather. Any dips towards that regarded as a buying opportunity as we chase a long-awaited move to $1,300 or a clearance at that level. RSI has broken an extended support line there from November, but so far not really any momentum to back that single technical signal. So perhaps we wait for at least a sub 40 RSI there to be regarded as negative for gold. That's it for me. More updates at the same time tomorrow.